All right, good morning, good people. Thursday the 18th, and I'm going to pre-record the session this morning. Got a few construction workers here, but we'll jump in. So we got Netflix earnings tonight, and the biggest thing I see here for Netflix is this big nested squeeze setup. 2-day squeeze, a daily squeeze, and a 4-hour squeeze. What that would potentially imply is if earnings are terrible and they gap it down, that could of course trigger that daily squeeze to fire to the downside. Vice versa, if earnings are just phenomenal and they gap it up, that could trigger that daily squeeze to fire to the upside. And being that we have that nested squeeze, there could be a bit of that domino effect. Daily squeeze fires short, that could trigger the 2-day squeeze to fire short, and vice versa to the upside. And then for the overall market here, if we look at the sectors on or the indices rather, on the scoreboard, the daily scores are getting a bit worse. QQQ with a -5, small caps -4, the Dow -6, and the S&Ps and RSP with a -1. And then the hourly charts are pretty busted. QQQ -12, small caps -12, the Dow a -10, and a -12 for the S&Ps and the RSP. Another indication that until things change, we're in a short the bounce kind of market. So for the S&Ps here, I'll give you the same two key levels I gave you yesterday. The daily 50, right around that 51.20-ish, and then the weekly 21 EMA down here around 49.50. They can pop it. We can get a pretty big bounce. If they can't stabilize it back above that daily 50, I think at the very least, we are looking for a flush down towards that weekly 21. And same thing here for the QQQ. The daily squeeze here fired short, and the same levels. They can pop it, they can get a little short squeeze action going if they can't stabilize it back above that daily 50. I still think you're looking to short the bounce. And if anything, you're shorting the bounces down to about 421, 422. The weekly 21 EMA. Now, kind of interesting, for the first time since November, the big three signals here on the weekly chart have shifted from bullish to neutral, from green to the blue. So that might imply, if we do come down here and smooch that 21, even if that does hold up as good support, it might not be a situation where we're going right back towards the all-time highs. Going from bullish to neutral, a bit more of an indication. If we can hold support there, we might be looking at a few weeks of chop. A little bit of back and forth trade. And hey, who knows, maybe a brand new weekly squeeze. I happen to think that'd be pretty cool. If we break that 21 EMA, then things could get a little bit uglier. So there's your key levels. And then as far as, let me show you the advanced decline here. We are going to wake up one day, and they're going to gap up the market, and they're going to walk it higher all day long. So I do think there's potential at some point here for a little bit of that short squeeze action. When that day comes, the internals will one more try. Haven't had my coffee yet. Take 3. The internals will confirm that kind of short squeeze action. There we go. So advanced decline here. Notice how yesterday morning, they gap it up into a positive reading at 1750. And you had a little pop going in the market. The S&Ps were green, the QQQ was green. About 15-20 minutes after the open, they walked the advanced decline lower all day long. Right. Open up here at a positive reading, and then they're walking it lower. They're taking it below that zero line. That's a pretty good indication. The pop you get there at the open, it's probably not going to last. It's probably going to be a bit more of a gap and crap kind of situation. So keep an eye on the advanced decline here today. And then the dollar, the buckaroo. We got this beautiful weekly squeeze here for the dollar. That potentially wants to take price back towards 107 to 107.50-ish. If they keep on taking the dollar higher, that should put a bit more pressure on the S&Ps, the QQQ, and the rest of the equities market. So keep an eye on that. And then the volatility index, the VIX, the one and the only VIX. I think if we're above that 16-ish level, expect more volatility. Pretty straightforward. And then Tesla. Let's talk some Tesla. So Tesla's going to gap down to about 152, which would be a brand new low. So I do think the pattern here, pretty similar to the pattern you had back here in March, where we, they rally it back into the 21 EMA. The falling 21 EMA, we get the brand new squeeze. We get the slingshot signal from the orange arrow. And then they take that squeeze and they dump it lower. And then again, we grind back into the falling 21, brand new squeeze, slingshot signal, and I think they might want to take that lower. Gapping down to about 152. Yeah, it's not pretty here in Tesla town. And then I think the bigger story here as far as earnings coming up is going to be that monthly squeeze. And like I said yesterday, if they can cut the thing in half inside the squeeze, from 300 down to 150, if the squeeze actually fires short and we get that release of energy, I think pretty quickly they could take that down to about $100. Big round number, big psychological level, and you also got some previous support there. So I'm looking for a short in Tesla, and then aside from that, we are short Cisco, which admittedly has not been too exciting. It's a bit more of a slow and steady kind of trade, but I like the short. The daily squeeze fired short yesterday. We've got a 2-day, a 3-day, and a weekly squeeze. We got a bunch of sell signals, and if they can take out the lows here around 47.50-ish, I think we're in good shape for a move down towards 47 or maybe a bit lower. So we're short Cisco, and then on a bounce, I would love the short ARK. I'm keeping an eye on names like Pinterest, names like Workday, names like EXPD, and SWKS. And then one more pick for you from my good friend Sam. Crowd. Crowd also looking like a good short. 21 EMA crosses negatively under the 50. We got a big 3 score, -6. We got a sell signal, the structure label is red, and that daily squeeze just broke short. So I think on a little bit of a bounce, you could try to short that somewhere closer to the 21 EMA, and then play for a push down towards 285, 283. Alrighty guys, short and simple, straight to the point. Until things change in a big fashion, we are in a short to bounce market. If they do take the S&Ps and the QQQ back down to weekly 21, that might be a good spot to take some chips off the table. If you got a few puts, you got a few call credit spreads, that might not be a bad spot to pay yourself. But I also think you might not want to jump in there blindly and start buying calls hand over fist. I think it might be a bit more of a spot where some patience is warranted. But alright, my good friends, thank you for watching. As always, I appreciate your time. Hope you find it helpful, and I'll see you tomorrow morning. Same time, same channel. Adios.